Richard Harris is now joining us to get us a quick sense of what the globe is looking like and what the setup is from his perspective. He's Chief Executive at Port Shelter Investment Management. Richard, great to have you with us here. Thank you very much. You know, as so often happens, people call the market, people are reluctant to call a turn in the markets, right? The market sometimes is already turned and then you follow. You call it a bear market rally, and then you slowly say, well, it's a rally, and then you say it's a bull market rally. Are we at that turning point in your assessment? Or you still believe this is a bear market rally, which feels a little different because it's supposed to? Your sense?
Well, you know, us analysts have a habit of following the trend, and then when the trend turns, then we follow that trend as well and blame everything else on hindsight. I think at the moment we're still continuing the trend from the last quarter of last year. You know, we had reasonable support in the equity markets last quarter of last year, partly because China started to open. The China story is still around about that moving. There looks as if there's still quite a lot of money around because people are still happy to buy equities, you know, in the main Western market. So we've got some support there. But I think the real conundrum, puzzle, enigma that we have at the moment is the fact that Jay Powell is trying to say that interest rates are going to continue to go up. Yes, they're going up less fast, but they're still going up, and there's no doubt about that. And yet the markets are almost completely ignoring this, preferring to bet on the fact that, well, maybe inflation will come off and maybe the Fed will even cut by the end of the year. So we've got this dichotomy at the moment with, in fact, the market actually fighting the Fed on this one. And we know what happens when it's trying to fight the Fed.
Okay. Richard, good morning and thank you for joining us. I wanted to ask you, what is the India view now? You know, up until maybe yesterday, we have actually seen probably China being preferred over India. Now, I don't know if you've heard of the Adani saga over here. A massive FPO, follow-on public offer, had to be pulled off after Hindenburg reported, some negatives about the company. Do you think the India valuation story will continue now? I mean, it's overvalued and there are some shares who are super overvalued. Will that continue to plague the India view?
Well, I think it might do. There might be some contagion from Adani, but I think Adani, of course, is a very separate issue, you know, partly because of its size. But in fact, if you think what Hindenburg were doing, it wasn't a difficult hit to try and focus on Adani. I mean, even on the simple fact that the share has done so fantastically well over the last 2-3 years is one indication, you know, when things will go that well, there probably is some downside there, even as a little bit of air comes out of the story. So I think Hindenburg probably did find a mark. I think the issue with Adani looking to put out a share offering right to the top of the market, you know, obviously from the company's point of view, that's great. But it also has risks in terms of the fact that investors may say, well, hold on, let's have a think a minute. It may well be that, you know, the company's looking at putting it out at excessive valuation. So I think it's actually been a perfect storm as far as Hindenburg's concerned, and it's been quite the opposite, an imperfect storm as far as Adani is concerned. And there will be some contagion, I think, into the rest of the Indian market, but I think we also have to look at Adani being a separate issue, certainly in investors' minds.
Putting all that together, Richard, how do you approach the Indian markets? You know, you've told us in the past, tactically, you look to Hang Seng, you look at the Shanghai market as well. But now, post the recent underperformance, your view on the Indian markets?
Well, I think we're at the moment in common with what we're seeing elsewhere is the US market is doing quite well. Therefore, the dollar's coming off a bit, and that's tending to support some of the emerging markets as well. So I think that, you know, while we have some, if you like, good performance in Western markets, we'll also see India pretty well hold in there. I don't really see India being a departure from everything else, or that it necessarily will come down as a result of recent events. But I do think that in the very short term, and as you said, I said tactically, China does look like the better bet, if only because it's been such a rotten performer over the last couple of years.
All right. Richard, it's a pleasure speaking with you, and we hope to continue to get your insights regularly. Thank you very much for joining us. once again today. Thanks indeed. We'll take a very quick break here. Our list of top stocks to watch. I mean, it's been an aggregate market we've been focused on for, of course, what's transpired. But there are individual stocks which are reporting this is earnings season as well. So our research team joins in with that on the other side. Stay with us.